Fundrise is crashing. First ever negative return in its history for the whole year. People are furious and many are surprised. Fourth quarter returns were a disappointment for most, but I am here to tell you that things are not as hopeless as they currently look. Let's go over my end-of-year returns with Fundrise across both of my portfolios coming up. If you're new to Fundrise, make sure to open a new account using my referral link in the description below and deposit just $10. For a limited time only, you will get a $50 bonus added to your account. Absolutely free, no strings attached. Don't miss this opportunity. Now, let's get started. In January of 2022, exactly a year ago, I made a bold prediction that Fundrise investors will see a return anywhere between 0 and 4%. As it turns out, my prediction was right on point, as both of my Fundrise portfolios saw close to a 0% return on the year. Now, we're going to take a look at both of my portfolios, but first, let's take a look at my real estate heavy portfolio, whose value crashed from $79,000 to around $76,000, as you can see in this upper left corner. Now, because Fundrise changed their user interface, getting to places became a little bit more harder. So let's go over my portfolio. So for that, we're gonna click on the portfolio here. And the first thing we see is that this real estate heavy portfolio consists of 90.8% of real estate. Okay, and 90.4, which is a long-term growth real estate. The other 9.2% is Fundrise IPO and Growth Tech, aka the innovation fund that I've been discussing on this channel for the past couple of months. Now, let's go back to real estate. And now, in order to get where we want to go, we actually have to click on net returns. And this automatically gives you the returns by quarter. But first, we're going to take a look at returns for the whole year of 2022. So for that, we need to scroll down and click on year. Okay, so we clicked it here. And for 2022, we're going to click on 2022. So what do we see here? Okay, so as you can see in 2022, I had a loss of around $109. When the numbers are in parentheses, that means it was a loss. That means I did not get $109, but I actually lost $109. And over here, a little bit lower, just as expected, around $1,400 was in losses from appreciation, aka the intrinsic value of the properties that Fundrise owns had plummeted dramatically in 2022. So that is what you're seeing here. You're seeing around $1,400 in parentheses and a red arrow. That means I lost $1,400 in appreciation in 2022. However, on the other side, you could see net dividends. And over here, you can see that there's $1,300 of gains, of positive returns in 2022, because this number is not in parentheses. Now, net dividends is that income collected by Fundrise from rent and the interest on the loans that they gave to land developers. So as you can see, luckily for me, the losses from appreciation and the gains from the dividends pretty much cancel each other out, which gives me only a slight loss of around $109 on a year, which is about negative 0.2% return on the year. Now, next thing we're going to do is we're going to look at the actual quarters of 2022. For that, we're going to scroll down and we're going to click on quarter. So these are all the quarters ever since I started investing in January of 2020. So as you can see, all our previous quarters except for Q3 and Q4 of 2022 have been positive. Let's take a look at the Q4. Look at that. This quarter alone, I had around $3,800 loss from appreciation and just a tiny fraction of that of gains in dividends, around $650. And that in turn leaves me with around $3,200 in losses just for the fourth quarter of 2022. And remember, the third quarter was also negative, even though it wasn't as dramatic, but that's where things started going south for Fundrise investors. Now, next thing is by far the most interesting thing to analyze and look here. So I want to look exactly at which funds have caused this drop or this decline or this correction, you could call, in Fundrise portfolio. So for that, we actually need to scroll up, and over here you're going to see line says to view the annual performance breakdown by the fund, and we're going to click here. Now look how nice and long this is, right? So remember, this is important to remember here, guys, because when we compare this to my second portfolio, you're going to see the differences between the number of funds that I have in each one of those. Now, what do we see here, guys? What do we see here? Let's find the culprits that caused the fourth quarter collapse in Fundrise. Just as expected, East Coast E-REIT in the fourth quarter, negative 2.7%. If we go down, there's a few other negatives here, but they're very small. Now take a look at the flagship real estate fund, negative 7%. Take a look at the growth E-REIT 7, negative 8%. Now guys, if many of you started investing after the pandemic, but before the crash of 2022, you would know that a lot of the money that you have invested in Fundrise automatically got placed into flagship real estate fund. And unfortunately, it's down 7%. So it could be derived from this chart that the same culprits that started the correction in the third quarter, even though the numbers were not as dramatic, are now in a full-blown free fall. Those are the three that I mentioned just a second ago. Other E-REITs and E-funds are also starting to show weaknesses. For example, take a look at the West Coast E-REIT. It was positive in the second quarter, positive in the first quarter, still positive in the third quarter, and take a look in the fourth quarter, even though it wasn't much, but it had a 0.3% negative return. Now, take a look at growth E-REIT 3 right over here. It was positive in the first quarter, second quarter, third quarter, all positive. And here we go. In the fourth quarter, for the first time, it turned negative. Now, growth E-REIT and Heartland E-REIT are positive. Let's take a look at a Heartland E-REIT here. Look, it's still positive, but look at the decline. First quarter had 4.5% positive return. Second quarter, 0.6. Third quarter went back up to 3.7, and now we're back to 1.2. So again, what we could see is a downward momentum, a downward spiral for most of these E-REITs. Let's take a look at growth E-REIT here. 4.6, 2.7, 1.9, 0.4. If you look at this, it's going from higher to lower. So what do you think is going to happen in the first quarter, or second quarter, or third quarter of 2023? Well, if you look at this, you could definitely say that things will probably get worse before they get better. So these two factors, right, the fact that certain E-REITs are turning negative for the first time and others that are returning less and less positive return, these two factors are leading me to believe that this Fundrise correction is closer to its beginning rather than the end, and we're likely to see a lot more red before things start turning around. And of course, if you've been watching this channel, you know that real estate always lags the stock market or the crypto market or the public E-REITs market. It always lags behind. So the things that we saw, the crashes that we saw with stocks, with crypto, with public REITs last year, they're finally starting to show themselves in the private real estate market, which Fundrise is in. So now let's take a look at my Fundrise IPO heavy portfolio. So I'm just going to switch it here. This is my Fundrise IPO heavy portfolio, and this portfolio saw its value decrease from around $52,000 to about $49,300 in 2022. Now, this portfolio consists of about 74% growth real estate. If we click here, you could see real estate around 74%, and the rest is growth equity. So I have a lot of money in this portfolio allocated to the Fundrise IPO, almost $13,000. And as you could remember, the first portfolio had about 90% long-term growth real estate. So let's see if this difference in the allocation to long-term growth real estate between my first and second portfolios, this difference in percentages had any effect on the results of 2022 and the fourth quarter. So for that, we're going to do the exact same thing that we did last time. We're going to go to net returns, and we're going to click on the year, and we're going to click on 2022. And as you can see, in this portfolio, I saw a loss of around $500. Okay, $500. Most of it, again, coming from appreciation. The dividends have offset it a tiny bit, but not by much. So that's actually pretty surprising, correct? Even though this second portfolio has less exposure, okay, to growth real estate, it saw higher negative returns. Why do you think that is? If you're thinking that it's because of oversized exposure to one certain E-REIT or an E-fund, then you are correct. Now let's take a look at the breakdown. Now before we go into the side-by-side comparison, it is important to know that both of these portfolios are in a long-term growth plus plan, and that is very important to keep in mind. Now let's take a look at both of these portfolio compositions side by side. This one on your left is my first account, my first portfolio, which is the real estate heavy portfolio, which was opened in January of 2020. On the right side, we have my Fundrise IPO heavy portfolio, which was open about a year to about a year and a half later, so sometime in the summer of 2021. What is the first thing that you notice here? Look at how many E-funds and E-REITs and all of these things I have in my first portfolio. There's about 15. Now look at my second portfolio. There's only 6, right? So what this means, I have greater diversification in my first portfolio because I started it long time ago, or longer time ago. So now that you saw this page, let's take a look exactly what percentage of my total account value is each one of these E-REITs and E-funds consists of. So for that, we're gonna go back and this is my first account, I'm gonna click on growth real estate here. And we're gonna do the same thing here, we're gonna click on growth real estate here. Look at this, flagship real estate E-fund, okay, consists about 50.4% of my total portfolio value in my first account, and growth E-REIT 7 makes up about 10%. Now, if we look at these same two funds, flagship real estate E-fund in my second account, it makes up about 15% more of the total account value there at 65%, and growth E-REIT 7 makes up 13.5%. So in conclusion, the first account consists of about 60% of flagship real estate E-fund and growth E-REIT 7, while the second one consists of a mind-blowing 78% of total portfolio value from these two flagship real estate fund and growth E-REIT 7. Now, if you have been paying attention, you will remember that flagship real estate fund and growth E-REIT 7 are the two largest culprits that tanked in the fourth quarter of 2022 as well as the entire 2022. So because my first real estate heavy portfolio consists of about 60% of these two funds that I just mentioned, but my second portfolio consists of a crazy 78% of the total account value out of these two funds. Therefore, the first portfolio only saw a $109 decline in 2022, while the second saw a $500 decline, or about a 1.5% negative return. So in conclusion, both of my portfolios finished negative, but very close to zero in 2022. My first portfolio is down around 0.2%, as you can see here, while the second one is down to about 1.5%. The major culprits of the decline were the flagship real estate fund and growth E-REIT 7, And of course, my second portfolio had much higher exposure of about 78% of total account value to these two funds. And that is why there was higher losses in my second portfolio. But what's important to remember, guys, is not to bash this flagship real estate fund and growth E-REIT 7 just yet, because all we have to do to get conviction in our investment is click on 2021. And this flagship real estate fund here returned a staggering 40% positive return in 2021. Growth E-REIT 7 saw almost a 19% positive return. And the same thing for my other portfolio. Flagship real estate fund saw a 35% return. Growth E-REIT 7 saw a 16% return. So negative returns that we saw in 2022 does not mean these are bad things to invest in. Things will always correct. They will never go up. So I do believe that we're not out of the woods just yet, and that 2023 will bring more red for Fundrise investors, as we saw in those charts that show that things are progressively still getting worse, and some E-REITs and funds that still are positive, are trying to keep the boat afloat, they're becoming less and less positive, and they will likely turn negative in first, second, and third quarters of 2023. It is important to remember that any investment doesn't go up forever, and there will be years of corrections. It is vital to have a long-term mindset and have conviction in your investments and ignore these short-term upswings and downswings. After all, guys, stocks are down 20%. Public REITs are down close to 28%. Crypto is down 50% or even more in 2022. Fundrise, on the other hand, is only down 1.5% in my case. That means that Fundrise is outperforming other investment vehicles by about 20%. So in my next video, I will make a new prediction for 2023 Fundrise investors and dive into more details of how I think things will play out quarter by quarter. Now that we know that Fundrise is not immune to this volatile environment and is not at the top of the market, it actually may be a good time to open a new Fundrise account and start investing and start buying more Fundrise funds and E-REITs and get ourselves ready for the bright green future. For existing Fundrise investors, maybe increase how much you put in every month, even if it's just $10 or $15, because now you know you're not buying at the top. Even if you're buying in the middle, if you dollar cost average in, you will be buying in the middle, in the bottom, and on the way up as well. And that is how you make long-term financial gains. Now, guys, this is it for me, but I want to hear from existing Fundrise investors. Did you finish red or green in 2022? What were your best and worst performance? Leave your comments down in the description below, and look out for my next video where I will make yet another prediction quarter by quarter of how I think things will play out in 2023. Thank you so much for watching, and I'll see you in the next one. Take care. Peace.